Hey everyone, welcome back to Corporate Decoder. Today, YHN Acquisition I Limited just filed an 8K today, and I am seeing a move that signals a push for more time to get a deal done. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just put more money into their trust account to extend their deadline. A common move for these types of companies. This is YHN Acquisition I Limited, a company that is essentially a blank check company, meaning it was formed to raise money through an initial public offering to buy another company. They are trading under the ticker YHNAU. So what happened here is on the 17th of June, YHN deposited $150,000 into their trust account. This is pretty standard for these special purpose acquisition companies, or SPACs. They do this to buy themselves more time. Originally, their deadline to find a company to merge with was the 19th of June, just a couple of days after this deposit. Now, thanks to that $150,000, they have until the 19th of September 2026. This gives them another 3 months to try and secure a business combination. Now, why is this important? Well, SPACs have a limited lifespan. If they don't find a target and complete a merger within that time frame, the money goes back to the shareholders and the SPAC essentially folds. Extending the deadline is a way to give the management team more runway to find the right deal. It tells us they are still actively looking and believe they can find a suitable partner. Think of it like this. Imagine you've been trying to buy a house, but you keep running into issues or you haven't found the perfect one. You might ask the seller for a little more time to finalize things. That is essentially what YHN Acquisition I Limited is doing here. They are paying a premium, in this case $150,000, to secure that extra time. YHN Acquisition I Limited has a few different types of securities out there. They have units which are made up of one ordinary share and one. These rights give the holder the option to get a fraction of an ordinary share. Then they have their ordinary shares, which is pretty straightforward ownership in the company. And then there are the rights themselves, which, as I mentioned, let you buy a piece of an ordinary share. Scroll title of each class, trading symbols name of each exchange, on which registered units, each consisting of one ordinary share, no par value, and one right entitling the holder to receive one. Tenth of an ordinary share YHNAU, the Nasdaq Stock Market LLC. Ordinary share YHNAU, the Nasdaq Stock Market LLC rights. YHNAU, the Nasdaq Stock Market LLC scroll. These different components trade on the Nasdaq under symbols like YHNAU for the units, YHNAU for the ordinary shares, and YHNAU for the rights. This structure is pretty common for SPACs as they go public. The fact that they are extending their deadline suggests they are not yet ready to throw in the towel. It also means they are likely burning through cash as they search for a deal, and this deposit is a direct reflection of that ongoing operation for investors. This extension can be a double-edged sword. On one hand, it means there is still a possibility of a successful merger, which could lead to significant gains if the right company is found and the deal is accretive. On the other hand, it means the possibility of the SPAC dissolving and shareholders getting their initial investment back, minus any administrative costs. The $150,000 deposit is a notable amount in the context of a $12 share price. If this was a larger SPAC, we might see larger deposits. This level of deposit is consistent with the scale of the company as indicated by its small institutional holder base. Historically, SPACs that have to extend their deadlines, especially multiple times, often face challenges in finding a suitable merger target. Companies that end up dissolving typically do so because they can't find a deal that meets their shareholders' expectations, or that is attractive enough for the target company. It is vital to remember that many SPACs, particularly those in the smaller end of the market, have struggled post merger. For instance, many SPACs that merged in 2021 and 2022 have seen their stock prices plummet by 70 to 90% from their post-merger highs as the initial excitement faded and the reality of operating companies set in. A $1,000 investment in such a situation could have quickly dwindled to just $100 to $300. So, while this deposit provides more time, it also highlights that the search for a business combination is not yet complete. We need to watch for any announcements regarding potential merger targets in the coming months. The next few months will be critical for YHN Acquisition I Limited to show progress. What I am actually looking for is any forward-looking statements from management indicating they are close to an agreement. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please hit like and subscribe for more. Join our Discord community linked in the description below.